Let's dive right into this explainer. Today, we're unpacking the absolutely massive scale and the forward-looking strategy of a true financial titan, JP Morgan. We're going to cut straight through all that heavy corporate structure to uncover the core 2026 investment trends buried within their latest research. So whether you're tracking how global money moves or you're just hunting for some really targeted financial strategies for the year ahead, we're going to break this all down for you. Here's our roadmap for the explainer today. We're kicking off with the global financial footprint, then moving into categorizing the client base, followed by key services and solutions. After that, we hit the really exciting part, top 2026 investment trends, and we'll wrap it all up with executive stock and compensation.
All right, part one, the global financial footprint, a presence spanning the globe.
They actively operate in over 100 countries. Just pause and think about that scale for a second. When you're moving capital, providing liquidity, and advising massive multinational corporations, you literally cannot be just a regional player. You need that worldwide reach. It's basically the required baseline for playing in today's globalized economy. To actually manage an operational footprint of that size, they organize everything across key global regions. So you've got the Asia-Pacific markets, places like mainland China, Japan, India, then over to Europe, Latin America, the Middle East, Africa, and of course, North America. It's this brilliant, highly structured global grid. It lets them be hyperlocal with their expertise, but backed by a massive worldwide network.
Moving right along to part two, categorizing the client base. Basically, who are they actually serving? They divide their approach into two huge pillars. On one hand, you have for companies and institutions, and on the other, for individuals. And it makes total sense, right? Serving institutional scale, like global corporate banking, raising sovereign capital, or funding commercial real estate, requires a completely different set of tools than serving individual wealth. With individuals, the whole focus shifts to highly personalized investment strategies and private banking.
Next up, part three, key services and solutions, the actual engine powering the financial world.
This is where we see their comprehensive financial ecosystem come together. You've got asset management and markets driving the institutional investing side, then commercial and investment banking step in to facilitate those massive corporate deals, while payments essentially act as the plumbing for global commerce. Rounding it all out on the individual side, you have wealth management and private banking. It's a complete end-to-end financial machine. Okay, part four. Let's shift gears into the really exciting stuff. Top 2026 investment trends. Time to navigate the new frontier. Straight out of their March 2026 insights, they hit us with a critical question. How should you handle volatile markets in 2026? Because let's face it, markets are unpredictable, and 2026 is already proving to be absolutely no exception. How you answer this one question is going to dictate your long-term success. When the market swings wildly, our natural human impulse is just pure emotional reaction, right? Fear, panic selling, or on the flip side, overly exuberant buying. But the institutional playbook, it demands rational decisions. It's all about ensuring your choices are well-informed, totally data-driven, and completely stripping the emotion right out of that volatility. Moving past the volatility, we hit this incredibly bold claim from their January 2026 outlook. Get this, alternative investments are no longer optional. Historically, alternatives, we're talking private equity, hedge funds, real assets, they were seen as sort of a nice-to-have add-on for the ultra-wealthy. Well, today, that paradigm has shifted entirely. They're now viewed as an absolutely mandatory piece of a well-rounded portfolio. But wait, you can't just jump into alternatives blindly. As their research points out, prioritizing due diligence and manager selection can be key to building an allocation to alternatives that enhances your portfolio's diversification and outperformance potential. So the magic isn't just in buying alternatives, it's in carefully selecting who manages them to actually secure that outperformance. And speaking of outperformance, let's talk about artificial intelligence. It's moving way past just being a tech sector story. In 2026, AI is a massive healthcare story. They're forecasting AI's potential to completely transform the industry by doing two huge things: rapidly advancing drug discovery and significantly improving diagnostics. This is literally where cutting-edge tech meets real-world, life-saving application. Real game-changer stuff here. All right, finally, part five. Executive stock and compensation. We're looking at some very niche strategies for insiders. If you're an executive receiving stock, you need to pay very close attention to the Section 83B election. I know, it sounds like some dry, boring tax code, but it's actually an incredibly powerful tool. It's a choice that might reduce your income tax liability over time when you receive stock or options that are subject to vesting. Basically, you're choosing to be taxed on the value of the shares today rather than what they might be worth down the road when they actually vest. For a corporate insider, this translates into a highly practical 3-step game plan. Step 1. You receive your stock or options subject to vesting. Step 2. You proactively consider making that 83B election to potentially lock in a lower tax burden. And Step 3. When it comes time to actually sell your company stock or restricted stock units, you use a 10b5-1 plan. That's a pre-scheduled trading plan that helps insiders sell shares compliantly without running afoul of insider trading rules. This is exactly what structured, rational decision-making looks like in action.
Which brings us to our final thought for this explainer. How does your own portfolio align with these 2026 institutional insights? From AI advances all the way to tax optimization, we've traveled from JP Morgan's massive 100-plus country footprint down to the specific tax codes executives use to protect their wealth. The biggest takeaway here? Whether you're navigating market volatility, allocating to alternatives, or managing your own equity compensation, structure and rational strategy are your absolute best tools. Thanks for hanging out with me for this explainer, and I'll leave you to think on how you can apply these insights to your own financial frontier.